Hey guys, this is Rudy for Investor Investor. Over the past few days or so, I've been searching far and wide to see if I can find another undervalued stock similar to Oxy to perhaps start a new thread. And I've looked at a few stocks, and in desperation, I reached out to my audience and said, guys, help me out here. Do you have any undervalued stocks I can investigate for us and explore? And boy, did you respond. So I'm going to go, in this video, I'm going to go through a few of your recommendations and a quick update on Oxy. And then we'll also take a look at some of the stocks, just two of them that I had a look at before.
This is what you came for. This is what you came for. I'm over. This is what you came for. I'm home. This is where she said I'm ready. So come.
All right, guys, let's kick it off here with your recommendations. So I just captured them all in one page that we can quickly scroll through. So Jake suggested Smith and Wesson. That's an interesting choice, Jake, because there's lots of activity in the firearms space, especially in the United States, and pretty much all the ammo is either sold out or it's so expensive, it's just ridiculous. So I'll look at Smith and Wesson for sure. Pulverizer, a regular contributor to our channel, said Intel. Previously, I actually had a position in Intel, so I like Intel, especially at around $50 Pulverizer. So we will take a look at that one. Ahmed said, how about fertilizer companies like MOS or IPI? Ahmed, I don't know them. I will take a look at them and see what this possibly offers us. Tom said, hey, here's a couple you can look at: THMAC, MCS, and MDP. I don't know any of them, Tom, but since you suggested it, I will take a look. This is Yen, who said, I'm an Oxy investor. I've had a tough time finding other valued stocks, so I decided to buy more Oxy. Well, that's kind of like that was a good move, Yen. Congrats and best of success. Brian says, how about Plug, PLUG? I'll take a look at that one too. The Babylonian Benedict, I'm sorry, says, take a look at Cadell, QDEL. I don't know what that is. He says it's pretty cheap right now, so we'll take a look at that one too. Tim says, I bought a lot of Viacom. I was previously, I had a position in Viacom as well. I will take a look at that one because Tim says he believes it's still undervalued. And then I have a recommendation here. Unfortunately, I blanked out the name. It looks like Matt's from MAC, SSL, and GEL. I don't know those either, so I'll take a look at those. Alexei from Russia said Suncor. We've had some discussions about Suncor before. I like Suncor. And I commented and said if it hadn't been for the fact that I am heavily invested in two Canadian energy companies, one being Enbridge and the other one being Pembina pipeline, I would have been all over Suncor like a kid on a bag of Halloween candy. This Korean follower of ours, and my apologies for not being able to read your name in Korean, says, how about Palantir? Should we take a look at that one? I will do. Will says, take a look at Root, ROOT. Francisco says Intel, same as Pulverizer. So we'll take a look at that one for sure. Robert said USAC is an interesting one to take a look at. That is a master limited partnership. So we'll take a look at that one and see what they say. Pekka says ET, don't call home. Take a look at ET, and I will take a look at that one too. Isaac reminded me that previously he had recommended Gazprom to me, so we should probably take a look at Gazprom as well as another energy stock. Tom said, have you looked at any of the SPACs? The answer is no, Tom, I have not. He actually recommends three of them: APXT, THCB, and GIK3. I'm not familiar with them, Tom. I don't know anything about SPAC, so I will take a look. Hunty says ARLP, Alliance Resource Partners. We'll take a look at that one too. He says he found this info via Rob Smith. Rob Smith is the guy who did the very awesome free cash flow analysis for us on Occidental just a little while ago that I shared with the group. And then Robert also said take a look at CLF. So we will do that and we'll take a look at them for sure. So Moving on quickly to a different topic here. Occidental recently announced, very recently, in fact, on December the 7th, Occidental Petroleum issued a press release announcing that it had commenced a cash tender offer subject to maximum aggregate purchase prices equal to $1.5 billion. They're refinancing some debt, and when they refinance the debt, they end up with a fistful of dollars in cash. Last time they had about $3 billion that they can deploy. This time they said on December the 7th that they will look to uh, raise a cash tender of 1.5 billion. Lots of information in the 8K. Obviously, I'm not going to go through this. I'm just looking at this one paragraph because I want to give you an update, which was the very next day. They said on December the 8th. Remember, the one I just read was December the 7th. Occidental Petroleum issued a press release announcing that it had amended certain terms and conditions of the cash offer to purchase and dated as of December 7th. That was the previous day. The amendments to the offer to purchase increased the maximum aggregate purchase price for the subject notes, excluding accrued but unpaid interest, from 1.5 billion to 2 billion. This means a couple of different things. Firstly, they're refinancing while debt is cheap. And secondly, they are going to raise a significant chunk of revenue in, sorry, not revenue, but cash that will help them to settle some of the near-term debts going all the way through to 2023. Change of topic again quickly. Let's take a look at some of the stocks, just two of them that I looked at very, very briefly. So superficially at a high level, Kinross Gold is recommended a buy by a number of different people. It's currently trading at around $7.70 or so in US dollars. It's actually a Canadian issuer. This screen that I'm looking at right now is Morningstar. It has a fair value of $9.12. The market cap's about 11.5 billion. So a nice sizable company. It's Kinross Gold is a Canadian-based senior gold producer. It produces a roughly $2.5 million of gold equivalent. Then when I look, I mentioned to you guys that every time I pick up a rock, I find a scorpion. Quantitative moat, none. Valuation, fairly valued. Quantitative uncertainty, high. Financial health, moderate. It's like, yeah, I'm not so sure. So let's take another look at a different analyst. So this is CFRA. They say it's a strong buy. And then they say the price in Canadian dollars on December the 4th was $9.20 with a target price of $16. So that's a very positive. And obviously they say it's a strong buy, as I just mentioned. So this is CFRA. 12 months trailing price earnings ratio of 8.48, which is indicating that the stock is relatively cheap. If I scroll down a little bit, it says our strong buy opinion is driven by Kinross's attractive growth projects and relative valuation. Kinross trades at a steep discount to its peers on every metric, and free cash flow included. Although we note higher geopolitical risk, we give Kinross credit for meeting or exceeding guidance, production costs, capex for 9 consecutive years. That's quite impressive. We expect AICS to improve following attractive growth projects. Kinross should outperform its peers in a rising gold price environment because of the company's discount valuation. That is according to CFRA. Zacks unfortunately ranks Kinross the bottom 15%. In fact, it's 216 out of 254 stocks in the industry ranking, and it's in the bottom 19% of its sector rank, which is obviously energy, and it scores Kinross an F on momentum, indicating that Zacks thinks this is going nowhere. Another one, very quickly, Wells Fargo, fair value $37.98. Currently it's trading at about $30. Market cap 122 billion. Of course, for the people who don't know, Wells Fargo is a major, very large US bank. Quantitative moat is narrow. The stock is undervalued. I think it's fair to say that it's undervalued. Its quantitative uncertainty is very high. This is according to Morningstar, with a fair market or fair value price of $37.98. So a little bit of uptick there. Went to CFRA. Since I did that for Kinross, I thought I'll take a look at CFRA as well. CFRA says Wells Fargo is a hold. Well, I'm looking for something we can actually buy. The price $29.55 on December 4th with a target price of $26 over the next 12 months. It's no big deal. Of course, it's actually trading above $26 right now. But look at this. It has a trailing 12-month price earnings ratio of almost 78. Now I don't like Wells Fargo anymore. That PE is way too high. Wells Fargo is constrained by the Fed's asset freeze on banking that limits loan growth and a prolonged economic recovery in 2021. The Fed's rate cutting has put pressure on Wells Fargo's net interest income as margin spreads and volume may not offset significant declines in rates. Hurting from the COVID-19 impact are business lines that benefit from lower rates like commercial loan originations, credit cards, personal loans, small business loans. Overall, Wells Fargo is also losing market share to its competitors, which is not very cool, and it continues its restructuring effort. So guys, that is kind of the wrap on this one. I did want to check in with you and thank you for all the recommendations. I will certainly take a look at those and give you guys some feedback as we go. As usual, if you like the videos that I create for you, please subscribe. That helps me tremendously. And at the same time, stay safe, take care, and I will see you soon. All of the best until we chat again. Thank you. Bye-bye.